Hello everyone, how are you all doing? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with really fantastic hints, tips and area location reports. Stay tuned today to hear about Melbourne's rising supply, falling prices and what it means for property investors. In recent years, Melbourne's real estate market has experienced notable shifts, characterised by a rise in property supply and a corresponding decline in prices. This phenomenon is driven by a combination of government legislations not favouring investors or second property owners, poor economic policies, and of course market dynamics. Understanding these factors is crucial for both prospective buyers and investors as they navigate this evolving property landscape. One of the primary contributors to Melbourne's increasing property supply is the recent wave of government legislation which is aimed at regulating the property market and the state government wanting to claw back funds after years of poor economic management. The Victorian government has introduced several measures targeting property investors. I have spoken about these before, including stricter rules on rental increases, new taxation policies, increased fees for property transactions. These policies are designed to protect tenants allegedly and ensure affordable housing, but they have also had unintended consequences for investors and in turn the tenants. The introduction of a vacant property tax aimed at discouraging property hoarding has led to a surge in properties being listed for sale as investors seek to avoid the tax implications. Similarly, regulations on short-term rentals have reduced the attractiveness of properties previously used for platforms like Airbnb. And then there's the lowering of the land tax threshold on all second or investment properties. These measures have increased the supply of properties on the market, contributing to a rise in inventory and subsequently flatlining or decline in property prices. Melbourne's property market is also, of course, influenced, like everywhere, by the broader economic policies that impact investor confidence. Recent economic challenges, including inflationary pressures and changes in interest rates, have affected borrowing costs, like everywhere, and investment returns. High interest rates have made mortgages more expensive, of course, reducing purchasing power of buyers and investors alike. As a result, potential investors are hesitant to enter the market, leading to a decrease in demand and an increase in property supply. Additionally, economic uncertainty has led to this slowdown in new construction projects, particularly in the residential sector. While there has been an increase in the availability of existing properties, the lack of new developments has created a mismatch between supply and demand in the short term. This imbalance has further to the decline in property prices. The rise in property supply, the decline in prices, they have significant implications for rental yields in Melbourne. As property prices fall, rental yields are expected to increase. This is because the rental yields are calculated, of course, as a percentage of property value, and with property values decreasing, the rental income relative to the property's value becomes more attractive. For investors who remain in the market despite the current downturn, the increased rental yields present an opportunity for higher returns on investment. Fewer investors are entering the market, and this leads to a decreasing supply of rental properties, which will create a more competitive rental market. It will drive rents up even further. Looking ahead, Melbourne's property market is likely to continue experiencing fluctuations as it sorts itself out, it adjusts to the evolving regulatory and economic environment. The increase in property supply, driven by those government regulations, economic factors, may lead to short-term declines in property prices, certainly flatlining, but this could be offset by the rising rental yields as investors adjust strategies and capitalise on high rental income. The long term, the property market should stabilise as investors adapt to new legislative landscape and economic conditions. The demand for rental properties should remain really strong, particularly in key suburbs and locations with robust infrastructure and amenities. People still need somewhere to live. As the market adjusts, potential buyers and investors should carefully consider the impact of government policies, economic factors, and market dynamics on their investment decisions. Melbourne's real estate market is undergoing a period of transformation, let's say, marked by a rise in supply, a decline in prices, not everywhere. Government legislations targeting investors and broader economic policies have played a crucial role in shaping these trends. While the current environment presents challenges for property investors, probably short to medium term, it does offer opportunities for those willing to adapt to this changing landscape. As the market evolves, understanding these factors will be essential for making informed decisions and navigating the complexities of Melbourne's property markets. I will keep you posted on all things property from around Australia. Don't forget to hit the like and subscribe button if you are enjoying the free content, and I will see you again very, very soon. Bye.